Hi everyone, hope you're all doing well, and today we talk about Palantir stock, and we've talked about this company once on the YouTube channel before, but today we're going to talk about this channel for a slightly different reason from the last reason we talked about this company. Now this is a stock that has been featured very much on the YouTube scene, but over the last kind of week, I'm sure you guys know what I'm on about without me actually dropping any name channels in here, but naming any channels, but the last kind of week there's been a bit of a debate whether or not it is a bit more of a YouTube hype stock, and a few other channels have kind of come out and said, look, there's YouTubers just really hyping this up and it's not really that great of an investment. And obviously there's still quite a few bullish YouTubers out there, and I'll kind of give my opinion where I'm currently at with Palantir stock and everything like that. So if you could smash the like button, if you're new and you found this video helpful, please subscribe. And also I've got to say, on the Yahoo Finance, I thought some of my companies were very much debated with like 50-50 bulls and bears. I thought like Skills, for example, was a very hot topic kind of stock from that point of view, but Palantir does give it a good run for its money. Before actually recording this video, I actually went on the Yahoo Finance Conversations tab. I always like to have just a quick flick through for there, and it's a very debated stock, and it's starting to get that on YouTube, where I would say that mostly it's been a very bullish company on YouTube over the last kind of few months. It's starting to get a bit more 50-50, and I'll kind of give my thoughts on the current position we're in. Now at the moment I'm very much neutral on the stock. I don't really have any plans to buy the company, even though I think it's a decent company. I don't have any plans to buy the stock, and at the same time I'm not short or anything like that. I'm very much the most neutral you could be on the company, and like I say, I don't really have any plans to buy it. And I think one of the big arguments that I'm going to put straight away out of here is that people say that it's just a fad, this company, and I totally disagree. Like, Palantir has a proven track record of growing revenue at a very good rate. It has some very big customers, and then big customers as well are increasing contracts as well as winning new contracts. Even though I personally, one of the big things why I never invested in this company is I'm a big believer on, I like to buy what I use and can try myself, and what industries I use and have a good knowledge in, I always try to use them to my advantage, and those are kind of like the sectors that I try and invest in. And personally, that's something that I've always stuck with. Don't get me wrong, if the risk to reward is there, and I think that the valuation justifies me taking a little bit more of a risk into a sector maybe I'm not so well known at, or know the industry that well, I will kind of take that punt, something like a Teledoc, for example. But Palantir for me was just a very big case of the valuation was a little high, and the risk to reward weren't there for me going into a company that I can't get my head around, and I think that also could translate into Wall Street maybe not getting their head around. But from the point of view is that if people do come at this company as it is a little bit of a fad company, I totally disagree. I believe the company probably will do very well over the next course of the few years. My big thing, and I think that maybe this is something that the other side that is being played at, is that the valuation is a little bit of a steep valuation, and that's something to consider when buying this company. Is something that I kind of agree in, and this is personally why I never went into this company, is the valuation is very high. So at one point this company was at 52-week highs, which was $45, and it's now $20. And I had the opportunity to buy this at $20, still didn't. But I think definitely when the company was at 52-week highs, it was at $45. That was a very rich valuation at $45, because I think right now we are sitting, the thing is this is sitting at a 38 billion market cap company. When we were at $45, we were something like a 70 billion plus market cap company. And you wouldn't think that, you think that a company that's recently come into the stock market, kind of putting in, I can't remember exactly the revenue they're putting in, you would think we'd be talking about a probably 10 billion market cap or lower company here. But actually this is quite a decent valuation on this company, 38 billion. When we talk about other companies that are, the early stages companies, normally we're speaking about companies that are 10 billion or less, and we're speaking about, do they have the potential to become a 100 billion plus company? This is already like halfway towards a 100 billion company, and I think, in fact, only a few weeks ago this was nearly already at a 100 billion market cap company. So the big thing is to realize that we're not talking about a little small baby company here. This has already got a pretty decent valuation on it, and I think when it was at 52 highs and this was $45 and the valuation there, I do believe that was definitely a crazy valuation, and I do believe that maybe the story just got the better of people in that situation. But we have had a bit of a discount now, it has had a bit of a drop, so we're going to go through these numbers from this point of view. Now at the moment, this is currently trading at a 35 price to sales ratio at 2021, which is definitely a pretty rich valuation, considering as well, that valuation when it was a $45 stock, that was a pretty rich valuation. Now at the moment it is trading about a 35 price sales ratio. I'm going to go from the point of view on this video as like actually going through the revenue point of view, because we don't have profit, and you could argue that by the time we do get to like 2024, we could be talking about a profitable company, and that could kind of change things, but we are kind of just working on what we do kind of have at the moment, which is the revenue, which is currently 35 price sales ratio in 2021. Now at the moment, if we say the company currently stayed at the current valuation it is at, we're in 2024, so we're talking going down nearly three and a half years here, the company is going to be 11 price to sales ratio. Now if you're considering that in 3 years time and the valuation stays the same, at 11 price sales ratio, that's still like 11 price sales ratio, I'm kind of getting to the point there where I'm like, okay, that's not actually too bad, but you've still got to wait 3 years from that, and that's it if it stays at its current valuation, which is a massive jump. If you're talking that the share price goes up 100%, obviously the revenue side of it will be about 22 price sales ratio then, and then you're like, okay, it's getting a little bit richer now. So I think one thing that you got to really consider with this company is that I think one big misconception I have seen in this company is that it is a really early stages cheap valuation company. Like there's a lot of growth priced into this company already, and you've got to work out, if you're thinking, in my opinion, if you're kind of going from the point of view, this is a company that could potentially, and one argument I can put against this case is that potentially the revenue could be a lot more in 2024, and what the forecast at the moment is they could totally get smashed out, and then the valuation doesn't look too bad. That's definitely one side you can put to it, but it is a pretty rich valuation you have going up here, and even if you're taking 100% share price gain, which is still amazing, in 3 years time, I would definitely be happy with that. I think the hype around of this being potentially a 1,000% return in the next few years, I think that needs to get a bit of a reality check. And here, one big thing that I'm going to say is like, one thing that I think people don't really talk about is how much growth are you actually willing to pay for? How much is growth actually worth as a valuation? Because when you start running the numbers on this sort of company, I think a 35 price sales ratio is very expensive. And how much can a stock realistically go from here that is already valued at this sort of valuation? Are we going to go to a 40 price sales ratio, a 60 price sales ratio? And we saw the slingshot that happened when it last went and did that. And I think when you look at 2024, there's still so much growth priced in. This is the kind of valuation that I'd be more willing to buy right now, but you've got to wait for the share price to flatline for a little bit for it to get to that sort of valuation and put in that revenue growth. And that's how much is priced in. And that's the big thing. And I think the one thing that I always consider with Palantir, and the big thing that I always put off, is that when you look at 2024, and you think that is, if they do the revenue they're supposed to do and it stays the same valuation, you trade it at 11 price sales ratio. Just put that into perspective of, how high that actually is. If we did the same on some other companies that I currently looked at and decided to buy instead of Palantir, you've got DraftKings, market leader in a massive growing industry. A 6, you got Teladoc, trading at a 5 price to sales ratio. Once again, another market leader in a massive growing industry. Tattoo Chef, probably one of the, I would say Palantir and Tattoo Chef are probably the two biggest like YouTube stocks out there right now. That's a 4. I mean, I only just realised it was 654. I should have carried on and see if I could find one for 321, and we could have made a nice little list here. But that kind of puts it into perspective that you are paying up for a decent valuation, and when you put that valuation against 3 other companies here, which are nearly half, even Tattoo Chef that's nearly a third of the valuation of what Palantir is, it's a lot. And like I say, a lot can change in 3 years. Don't get me wrong. These revenues that I'm using, they could easily change, but I'm just using an example here. And very much, if you wanted to start running off profit, you could do different numbers here. But what I'm just trying to make this video about is this topic, and Palantir that is being accused of being a bit of a YouTube hype stock. I kind of agree, but I also disagree, because I think that it deserves some respect because it is a good company and I believe that it has a very successful future. But I think one thing that is kind of being used about it is that it is getting, there's a bit of a story here, there's a bit of hype involved with this company and the story side of it and how well it could do, and this idea that the stock could go up absolutely huge amounts. I have to agree with some of the bears on this one and say that, this is not a cheap company. Don't think that this is a company that is incredibly cheap. Do not think this is a under 10 billion market cap company that has the potential to be a 100 billion market cap company further down the line. It is already at a hefty valuation. And I think that's maybe one thing that people are kind of getting caught up on, and not actually as on even on the YouTube scene maybe, is not saying that actually, the valuation is very, very rich and there's already a lot priced in here. 38 billion company is a lot. Buying up a company that's at 11 price sales ratio off 2024 numbers and it stays the same is a lot. And my thoughts with this company and why I've not actually got involved in this company is half of that it's not in an industry that I want to get that much involved in, but if the valuation was right, I could do. I think it is a good company, and if the valuation I felt was dirt cheap, I could see myself probably getting involved in it. But at the moment, I'm not willing to take this risk compared to the reward, because I think the upside here, if this company was to go up 100% this year, we're talking about a price sales ratio of like 70. And that's so expensive. Even on 2022, 2023, the valuation is still very, very rich. And that's why I believe, there is some upside to be had here, but I think there's already a lot of growth priced into this company at this current valuation. And my actual thinking with Palantir, where this would actually become the more attractive valuation, is that what we could see here with Palantir is if, let's say we have 12 months where the share price does nothing, it actually consolidates. Obviously we will have the lockup period, maybe insiders sell, which is something that has kind of been hinted at already by the management, that maybe the insiders do sell a little bit over the next coming few months. Let's get to, if Palantir gets up to lockup period, we're still at if further down the line, let's say we get into 2022, the valuation is still the same, but now it's starting to dip a little bit. Revenue is performing very well, so the valuation drops even more than what we expected. Or even in an ideal situation, the stock is even less than $20. Then I think we start talking where, okay, now we're starting to get to a bit of a decent valuation where it's more attractive and we can actually see a bit more upside. And I thought I'd cover this today because I think it is a very tricky point, and I haven't really wanted to talk about Palantir, because I always feel like if you talk negatively about a very popular stock, you can leave yourself open for, people don't go into the video with an open mind and just like, nah, that's just a load of rubbish, you can't talk negative about my stock. And I think that's kind of like the world we kind of live in right now, and I think it's a bit of a shame that that's where we're kind of at. But I thought I'd just say my point of view, because maybe you find it a little bit helpful, maybe you're considering this one, and I just tried to give it a neutral point of view of like, I think the company is fantastic, but also I believe the valuation is not as attractive what is being made out, and that's something to be cautious of, I guess. So yeah, I just wanted to make this video on Palantir because it has been a hot topic with the bears, with the bulls on the YouTube, and also other forums or Seeking Alpha or Yahoo Finance. It's been a very hot topic, so I just thought I'd give my thoughts on it. And like I say, I'm not on either side really, I just give my thoughts on why I think it is a great company, but it's also a great company that I'm not invested in right now. And I hope it was useful anyway. But if you could smash the like button if you're new and you found it helpful, subscribe, and I'll see you in the next video.